Hello, everyone, and thank you for joining us. My name's Michael Fotheringham. I'm the Executive Director of AHURI, and I'm delighted to welcome you to the latest event in our AHURI Research webinar series. Before we begin, I want to acknowledge that I'm hosting this webinar from the lands of the Wurundjeri people of the Kulin Nation, and I also acknowledge the traditional custodians of the various lands on which you're all gathering today as the Aboriginal and Torres Strait Islander people participating in this webinar. And I pay my respects to elders past, present and emerging, and celebrate the diversity of Aboriginal peoples and their ongoing cultures and connections to the lands and waters throughout Australia. Now, AHURI is pleased to be able to offer this research webinar series as a means of keeping you informed of the latest evidence and to help you engage with research findings from our ongoing program of research, at a time when our public face-to-face conference and events program is, of course, still on hold. And so today will be our 7th instalment in the series. If you're interested in our previous webinars, the recordings are all freely available on the AHURI website. Before we meet today's presenters and I introduce you to the topic for today's webinar, I just want to take a moment to introduce you to AHURI's new National Cities Strategic Research Agenda. As part of AHURI's strategic plan, we've committed to developing a program of research to explore the many issues facing Australian cities today. Expensive housing markets, extensive geographic sprawl, high carbon intensity and resource consumption, rapid population growth, and changing transport needs, and of course now the coronavirus pandemic. It's AHURI's ambition to provide Australian cities and urban policy research with the same coordinated focus and engagement with the policy community and impact that we currently bring to housing and homelessness research. So the launch of this strategic agenda and our website hub is the first step in our journey to delivering a national cities research program. So I'd invite you to take some time to visit the new Cities and Urban Hub of the AHURI website, and it showcases 12 key research themes that we've identified as either defining current cities policy in Australia to date, or that we believe should be considered in our policy focus as a nation moving forward. If your organisation is interested in partnering with AHURI to deliver a future cities research program, we'd invite you to contact us and start a conversation. Right, before I introduce today's topic and speakers, I do need to provide you with a few instructions on the software and some housekeeping. This webinar is being recorded, so if you need to step away, or for that matter, if you want to return to it later or to forward it on to a colleague, the recording will be on the AHURI website in the coming days. At the end of today's webinar, you'll receive a survey, and we really do welcome your feedback so that we can refine and improve future webinars to ensure we're presenting information in a way that's useful to you. In terms of participating in today's webinar, some brief instructions. You're listening using your computer speaker system by default, but if you prefer to join over the phone, just select telephone in the audio pane and the dial-in information will be presented to you. You'll have the opportunity to submit questions by typing them in the questions section of the control panel. And you can submit your questions anytime during the presentation. I'll collate those and we'll address as many of them as we can during the Q&A segment following today's presentation. But do please disregard the raise your hand function, as we're not going to be using that today. Now, today's topic and presenters. I'm delighted to welcome you to today's webinar, New Housing Supply in Australia, a 10-year analysis. Our presenter today is Professor Steven Rowley from the Curtin University, lead author of the AHURI report, The Uneven Distribution of Housing Supply 2006 to 2016, which is the basis for today's webinar. The study examines the quantity, composition and distribution of new housing supply across Australia between 2006 and 2016, and seeks to explain variations in local rates of production. The report, along with a policy evidence summary and a standalone executive summary, is now available on the AHURI website, and the address should be on your screen. Our speaker, Steven Rowley, is the director of AHURI's Curtin Research Centre and has been active in the areas of affordable housing and housing affordability for the last 20 years, covering both the United Kingdom and Australia. He's delivered research for numerous organisations, including the governments of Western Australia, Ireland, the UK, as well as the European Union, and of course for AHURI. He's currently undertaking research in areas including urban regulation, housing affordability, subsidised private rental, housing and land supply and housing need. We're also privileged to have with us today Connie Kirk, whose property and urban development experience spans 25 years, most recently as the National Executive Director of the Urban Development Institute of Australia, UDAA, where Connie represented over 2,500 companies in advocating for cohesive infrastructure development, better linked population growth and industry job creation, and the development of vibrant communities that improve livability and affordability for all Australians. So welcome to both Connie and Steven. And now it's my pleasure to hand over to Professor Steven Rowley.
Thanks, Michael. Hello, everyone. I can't see anybody apart from Connie and Michael, so it's a bit difficult to judge whether I'm keeping you all enthralled. If Michael and Connie turn off their webcams, I know I'm not doing a very good job. But hopefully, with all the graphs and the tables, I'm just going to take it as read that you're all absolutely riveted by all this, and we'll keep pushing on regardless. Okay, so you might think, why am I sat for a presentation that's talking about housing supply that's 4 years out of date? Well, yeah, good question. But the patterns, and I think, and the policies and the impacts of policy during that period are really quite informative as to what's likely to happen moving forward. And I think there are some very interesting trends that have sort of identified where the issues are and where policymakers really need to focus their attentions moving forward. And of course, with COVID-19 having perhaps accelerated a number of different trends and highlighted perhaps different preferences of consumers, I think it becomes more and more important. So I think we'll go to the first slide, just to give you an overview of what I'm planning to do today, just to explain what we did and why we did it. You can see there, that's the actual report. I wanted to start by just talking a little bit about dwelling supply over the last 20 years, just to emphasize that there are very different patterns within our city or across cities and even within our cities. And that's why it's so difficult when you're talking about policy that, you know, one size just doesn't fit all. I mean, you look at the home builder policy, for example, had a really significant impact in Western Australia and South Australia, but less so in New South Wales, because different local market characteristics mean different outcomes from different policies. So then I'll talk about the findings of the research, patterns of dwelling supply over that 10-year period, and then talk about the local factors driving housing supply, which come from a number of case studies, and talk a little bit about implications for policy. So I'd like to acknowledge my co-authors, Catherine Gilbert, Nicole Goring, Chris Leishman, and Christopher Phelps as well. I don't know whether they're online or not, so maybe we'll find out later. Okay, we'll go to the next slide. So those are the four research questions that we dealt with, just looking and say over what happened over that 10-year period, trying to identify what impact planning policy, for example, had on planning supply. Is planning policy really that important, or are there other factors that really determine the location and the type of new supply? And then also we're looking at what lessons could be learned from those local government areas that really did deserve, secure a really significant and diverse supply of new housing. So this is part of a series of pieces of work that I've been involved in, trying to explore and explain the operation of the development sector. It's not well understood by key policymakers. I think the development industry is very misunderstood in terms of its drivers and so forth. And so we're trying to identify, okay, what are the key factors that will really shape developer decisions, which will then help policymakers tailor policy to have the greatest impact. So I think generally the development industry requires a lot more research, and AHURI's been good enough to fund quite a bit of that. Okay, we'll move on. So there was some previous research led by Rachel Long, including a number of people, looking at the responsiveness of housing supply. And they also looked at patterns of housing supply, and the methodology that they used found that around 80% of new housing was found in high-priced LGAs. Those findings weren't well received by certain areas, particularly Grattan, who used a different methodology to show that most new houses are actually being built on suburbs in the urban fringes where prices are lower, and that 2/3 of all new houses built in 2016-17 were located in areas with house prices lower than the median. So we want to again use a different methodology to really uncover just where supply was going. but more importantly, to look at the drivers of those supply and that supply. And the reason why we're looking at 2006 to 16 is because of the availability of census data. It'd be obviously great to update this when the next censuses come out, just to see what impact recent policy and strategic planning documents have had on the last 5 years. So if we can move on again. Now, I wanted to start with looking at dwelling commencements. Now, I find the whole thing about dwelling commencements fascinating. It's I think, the best measure of what's happening in markets. So I do like using dwelling commencements per 1,000 persons. So it gives you a nice relative measure across different cities. Now, we can see here the Australian figure. So we're looking at an average, which is the black line there, over 20 years, of around 7.5 to 8 dwellings per 1,000 persons. And you can see the blue line is the average over the last 5 years, which has increased to just under 9 dwellings per 1,000 persons. So we've seen a bit of an increase in the rate of new supply over the last 5 years, controlling for population. The black lines there are the impact of the first time owner grant boost post GFC, and you can see the impact of giving your money away on new house building. So you can see a bit of a cycle there, up, down, up, down. 2019 is interesting because you'll see across the different cities that 2019 was a pretty poor year across the country for dwelling commencements. Activity was falling from the highs of 2016 to 2018. So the market was struggling even before COVID-19, which means that the responses necessary to stimulate the market were really, many were arguing, required even before COVID-19, particularly in Western Australia. If we can move on to New South Wales. Now, New South Wales, you can see, is way below the Australian average. Very low dwelling outcomes or dwelling commencement outcomes up until around 2015. So these are really important because it reflects the outcomes of really population growth and investment activity. If you've got a really low period of new supply and you've got strong population growth, there's only one thing going to happen to prices and rents. And I think New South Wales is a case study of that. But clearly there was a response around 2013, 2014, and the development industry started building quite a lot more. If you contrast that with Victoria on the next slide, you can see much stronger patterns there of dwelling commencements. Certainly since about 2010, we've seen commencements above that 20-year average. But again, 2019, significant drop in dwelling commencements. Again, Queensland looks different. You can see stronger supply in the early years, dropped off a bit, came back, dropped off again. So really clear cycles there, with the 5-year average being very similar to the 20-year average. But you can see the contrast between New South Wales, Victoria, and Queensland. Again, South Australia is different as well. A lot flatter in South Australia, not too much going on there. So you can see dwelling commencements way below the Australian average. Stepped up to about 8, but have been pretty flat since, and again 2019 dropped back. Now Western Australia is a really interesting one. So you can see there very strong levels of activity compared to the Australian average. The actual average over 20 years is above 9, but you can see the last 5 years have been a real struggle, with the commencement average around about 7. So you can see a big drop off since 2014. So certainly the development industry has been struggling for the last sort of 2 or 3 years, and COVID-19 certainly is not helped that recovery. But clearly you can see that if you know the Western Australian market, very close relationship with population boost resulting from resources investment, though that too late or mid to late 2000s plus to around 2013-15. So the industry responded pretty quickly to those shifts. So what I want to emphasize is the very different patterns across cities. So if we can move on now, I better start picking up the pace, I think. Just a summary of that. You can see there in the top one, that New South Wales certainly has picked up its commencement activity, and Victoria over the last 5 years, where it's contracted in Western Australia. You see the figures are much lower in Tasmania and Northern Territories, but it's really about the relationship between dwelling commencements and population growth that will deliver those price changes. In terms of difference from Australia average, you can see Victoria has been consistently strong, Western Australia a bit volatile, but ACT is a standout really. The amount of new supply going into the ACT is very strong indeed. So if we can move on to the next one. So in terms of 2006 to 16, what we looked at is the changes to dwelling stock, hence the need for the census data. Looked at diversity as well, so has diversity changed over time? Then we're looking at the distribution of supply. Now we proxy using building approvals because the census data had a change in the way it collects data over those 2 periods, which I'm not that confident about. Building approvals allows us some quite useful LGA data as well. And what we calculated is a relative distribution of supply. So again, starting off with a particular base, looking at approvals over time, and then looking at mapping those onto price as well. So that's the basic methodology around these patterns that I'm going to show you. If we can move on. So this emphasizes the really low supply outcomes in New South Wales and South Australia and Tasmania indeed. So you can see there only a 12% percentage increase in stock, and the ratio there, if New South Wales had the same proportion of Australian stock in 2016 as it did in 2006, the figure would be 1. So you can see, compared to Australian growth, New South Wales has come back quite a lot. Victoria has increased its share, so has Queensland. Western Australia extremely strong. You can see there a very strong relationship between stock and population change. The only one that's a little bit different is the Northern Territories, which is seeing stock grow at a faster rate than population, which is structural changes in the Northern Territory market, I would say. But this again emphasises how different states have grown very differently over that 10-year period. Moving on. Now this is going down to local government area changes. So we can see there are 10 local governments who doubled their amount of stock over 10 years. So that's a tremendous increase in the proportion of stock. I mean, some of those might have been reasonably small local authorities, but really they include Gladstone and certain time Jarrahdale in Western Australia, Bundaberg and Geraldton as well. So not that small. Then you had a further 9 that grew up to almost up to 100%. But the most common one across the local authorities that we're able to match 2006 to 16, well, stock growth between 0 and 25%. So you're looking at around about 2% on average. So that's what really happened in the majority of local government areas, only small increases in stock. And of course, you'll be thinking, well, yeah, that's obvious. Supply is constrained in some areas where it's more available in others, and that's certainly the availability of sites is one of the key drivers, but market conditions are another one as well. So if we can move on again. Then we're looking at dwelling diversity, and this sort of really concerns me in many ways. You can see there across all states there was actually a reduction in the number of 3-bedroom dwellings and an increase in the number of 4- and 5-bedroom dwellings. ACT again being another outlier who saw bigger increases in 1- and 2 bedrooms. Now we're releasing some AHURI research tomorrow around housing aspirations, which show the number of, actually the most popular dwelling size is 3 bedrooms. I assume nowadays certainly that's 3 bedrooms with an additional study in there as well, but 3 was the sweet spot when it came to the actual number of actual bedrooms. So it's a bit concerning to see big drops in the number of 3 bedrooms across all states. A lot of that will be the replacement of old stock with new stock, but also the prevalence of new larger 4-bedroom dwellings on the in greenfield area. So this is the proportion of the total stock. So 3 bedrooms are becoming less common, 4 bedrooms more common. Again, move on. Looking at an LGA level, you can see there are only 40 local governments that saw an increase in the proportion of 3 bedrooms across those 480 odd local government areas, whereas 364 or 3/4 saw an increase in the number of 4 bedrooms. But even when it comes to 2 bedrooms, you would have thought that, you know, given the push towards diversity, more apartments, you would have seen a greater number of areas with a growth in the number of 2 bedrooms, but these have really been sort of concentrated on almost 25%. So again, I repeat, it'd be very interesting to see how policy changes have affected the stock and diversity over the last 4 or 5 years. But clearly, the 10-year period, 2006 to 16, I would argue that stock actually became less diverse across most local government areas. Okay, if we can move on again. Now, building approvals, again, very useful data source. It comes out a lot quicker than commencements. You can go down to the local government level. So this looks at the total number of approvals across states, but also looks at the ratio of approvals to stock change. And there's 2 really, New South Wales and South Australia, that stand out, that only around just under 70% of approvals, or the ratio of approval change to stock change. So you're seeing fewer approvals actually ending up in stock, where it's above 80%. Or around 80% in other areas. So it sort of adds a caveat to some of the building approval information, but a lot of that is due to the rate of demolitions. So if you've got a high rate of demolitions, you're going to have a lower ratio between approvals and stock change. But also just not acting on a building approval because of changing market conditions is also another impact. But generally, there's a fairly strong correlation between approvals and stock changes. So they are a very useful way of identifying patterns of dwelling, and particularly what developers are looking to deliver across local government areas. Okay, we can move on. So what we really wanted to do is look at the changes in dwelling structure for ABS, but they did change their methodology for collecting dwelling structure data, which actually showed that there was a reduction in the proportion of flats and apartments in Western Australia and an increase in the proportion of semi-detached, which, you know, knowing the Western Australia market quite well, was certainly not the case. So this is one of the reasons we switched to building approvals, and you can see there that the very different structures, or the very different proportions of different dwelling types within the states. With New South Wales, you know, only 7% separate houses, 75% in Western Australia. So again, this is trying to emphasise very different state markets, and even within within states, very different local government markets as well. So we're talking about an uneven supply, yeah, certainly across states, but even within states as well. Okay, if we can move on again. Now, what we wanted to do is something a little bit different, looking at the relative distribution of approval. So basically, we use a starting point, a stable point for 2006 with either population or stock, and then we look at the number of building approvals over a 10-year period and then derive a ratio. So looking at whether the number of building approvals actually reflects the initial starting point. So generally, if you've got a figure above 1, you've got more than your starting share of building approvals based on the population, or the starting population. So generally, you'll see in these maps, anything with a location quotient above 1 has got more than its expected amount of dwelling approval. So if we can go to the first map for Sydney, and these concentrate on greater capital city areas. So the darker the red, the greater the level of housing supply relative to its starting position. So you can see there in Sydney that it's actually reasonably even. There's not too much dark red, and there's not too much in the sort of lighter tan type color. You can see there's a few concentrations, but compared to other states, it's actually relatively even. You're seeing some, certainly some strong levels of new supply within those inner and middle areas, and some strong level supply in outer areas as well. We go to Melbourne next. You can see there are greater concentrations there. You can see much more darker red on the outer areas of Melbourne, but also there's some dark red in the city of Melbourne itself. So you can see there, some more supply is more concentrated, more darker colours and a few more lighter colours as well. You look in Brisbane, there's only 6 or 7 local government areas. It's only really in that one stretch there you've seen greater than expected levels of building approvals. Lots of areas that have basically dropped back in terms of their overall share. And then you've got the north west part has got slightly more than it's expected. Moving on to Adelaide, you can see patterns there, greater supply on in greenfield areas on the fringe, less so in the inner and middle areas. Perth's even more dramatic. You can see that supply very much concentrated in those outer areas, very little compared to the proportional increase in the outer areas in those sort of inner and middle areas. So you can see there, certainly for Perth and Adelaide, very uneven supply of dwellings concentrated on the outer areas. If we go to the next slide, we break it down into inner, middle and outer areas. So to see an even supply, you'd expect to see certainly areas with approvals above expectations being roughly equal. So here the line, so for Sydney, in inner areas, 50% of LGAs had approvals that were above expectations. In other words, it grew quicker than their starting base point. And even in outer areas, there were 35. Whereas you look at Greater Perth, you've got over 70% of outer areas that grew really quite quickly, but very few of those inner areas. In Melbourne, none of those middle areas grew above their starting point, whereas very strong inner and some strong outer as well. And Brisbane is all concentrated in those outer areas, but there is no middle Brisbane. Moving on to those below expectations, you can see there again in Sydney it's reasonably even. So you've got half that are above expectations, roughly half that are below, some that are actually on expectations. But then you can see in Melbourne there's quite a lot of areas that didn't grow as much as would have been expected, and certainly in Adelaide and Perth, a lot in the inner and middle areas again did not grow as expected because really supply has been concentrated in those outer areas. Okay, if we move on to the next one. And this is where it gets a little bit more complicated. Here we're looking at the number of local governments, or those local governments that had greater than their starting level of expected supply. So, for example, in Sydney, the first row reflects a concentration of that supply. So figures below 50 indicate supply is concentrated in less than half of LGAs. And Perth and Melbourne, you can see supply is concentrated in around a third of LGAs, or 34%. So certainly, when you've got concentration in just a third of LGAs, you've certainly got an uneven supply there. But also looking at supply and house prices, there is some modelling within the paper that I didn't want to go into today because people don't generally like equations. So you can certainly have a look at the modelling in there, basically saying that if you're going to do an effective modelling exercise, we need some better quality data. But there are some links there between supply and price. But certainly in all the greater capital city areas, it was more likely that the high level supply LGAs had below starting average house prices. So you're looking at more concentrations within those low house price areas. In fact, all the high supply LGAs in Perth and Brisbane were low value areas. Outlier is Sydney, but even there, 40% of high supply LGAs had prices below the city average. So you're seeing generally new supply is going into those cheaper areas, many of which are on those urban fringes. But large amounts of supply do not necessarily guarantee low price change. So in Sydney, 45% of those high supply LGAs, in Perth, 45% of the high supply LGAs are seeing price growth above the median. So just because you've got a lot of new supply doesn't mean your prices are not going to grow higher than average. So, the normal economic theory, if you've got lots of new supply, it will dampen price change. Well, that's not always the case. In terms of the supply of units, certainly it's much more likely for unit supply to be in lower priced areas in Perth and Melbourne, and unit approvals more likely to be in higher value areas in Sydney. And again, some slightly different patterns when it comes to unit price change. Okay, if we can move on again. Now, what we wanted to do is overlay dwelling approvals with house prices. So these are house prices across that 10-year average. We've come up with a measure that gives you sort of average. Now you can see there, A is the cheapest area, down to E, which is the most expensive. So here we've seen in Sydney a bit of a mix there. There's some high supply areas that are fairly cheap, but you've also got some higher priced areas that have quite a lot of supply within that inner ring. So a bit of a mix, so supply going into both low, medium and higher value areas. But if we move on to Perth, you can see very much supply concentrated on those low value areas. So you can see the dark red, they've either got the price categories between 0 and 400,000 or 400 to 600. Whereas all the expensive areas in that inner ring saw very little new supply. And again, you're probably thinking, well, you know, it's constrained areas, it's going to force up prices. And there is certainly an element of that. There's also about opportunity as well. You know, lower priced areas, particularly on the urban fringe, are where those opportunities have been available. So if we move on to general summary of what we found again around supply and price. So there is a relatively strong negative correlation between supply and price across the 135 LGAs that we were able to map. So you know, there is evidence that an increase in supply has a dampening impact on price changes, which you would expect, but there is a weaker relationship there for units. So, you know, encouraging for policymakers. You do more supply will have an impact on prices. But let's be reminded here, it's actual units on the ground. So, you know, always hear from policymakers, if we release a load of land, well, that will bring down house prices. Well, no, you've got to get the land developed first and actually have units, and it's not quite that simple. Just releasing land does not equate to housing on the ground. It's the first step. But certainly when you get the dwelling units built into the market, it does have a dampening impact when you come to houses. So those high supply LGAs, we looked at 15 high supply LGAs, their median price is 412,000, whereas the 15 lowest supply LGAs had an average price of 1.36 million. So clearly massive difference there between the median prices in high and low, only a small sample, but yeah, massive differences. And definitely the price growth in those low supply LGAs is 70%. 5 times higher than high supply. So, you know, you're constricting supply, prices are certainly rising higher than in areas with lots of new supply. So consistent with this sort of economic theory. A little bit different for units though. So again, those 15 high supply unit LGAs, oh, can we go back please? Price growth of 31%. Yeah, just leave it there. Compared to 21% for lower price growth. So there's only a 10% price growth difference between high and low supply LGAs when it comes to units, and the average price is very similar as well. So it's not quite so simple when it comes to the impact of new units and prices, partly because it affects the nature of the area, the amenities and so forth. If you put more supply in, actually it becomes a more livable space. It might force up prices, so it doesn't necessarily equate quite as much as it does as units. Okay, we can move on now. So we really wanted to see, well, what were the drivers around those patterns? So this is where the qualitative component came into our analysis. So we did interviews with state and local government planners and developers, and we referred back to some work we did for the ARC in 2013-14, where we looked at the impact of urban regulation on supply. And then also in the interviews as part of this particular project. So we were able to look at any changes across that period, and also coincided with data that we got on planning controls from the Australian Urban Land Use Planning Policy Survey. This is Nicole Doran and Catherine Gilbert out of the University of Sydney. So looking at how planning control changes over that time had any impact on supply. We also looked in detail at 8 case study high growth LGAs, 4 in New South Wales and 4 in Western Australia, to see, well, what were the key drivers there of generating high levels of new supply. So we really wanted to uncover the lessons that we could learn from those particular LGAs. Okay, if we can move on. So what drives uneven supply? And look, clearly the availability of sites and housing market characteristics play a major role here. It's important to know that LGAs contain many suburbs, often with different housing market characteristics. You might get some suburbs with very older established areas already built out, so it's very limited capacity for new dwelling supply. So you're seeing very little going there without major sort of policy shifts, whereas other suburbs might be new greenfield sites, plenty of land available for new house building. So you're going to have different market characteristics delivering very different supply outcomes. So the capacity of an LGA to really deliver strong growth really dependent on the nature of the available land, but also whether there's a political appetite for new supply, whether you've got policies that really try and attract new development or a little bit anti-development, as is the case for some local governments. But also crucial is those market conditions. Okay, if you can't generate a profit, you're not going to get new housing supply. It's as simple as that. The development industry is motivated by profit, and quite rightly, because you need profit to compensate for the risk. So if there's no profit available from sites, you're not going to get development. And we look at New South Wales, where the market was really quite flat until towards the end of that study period, and then when it started picking up as a result of little supply, more population growth, investment activity, prices started to rise, and that really stimulated new development activity. Well, you look at Western Australia, certainly a price boom on the back of mining activity, which really drove new supply, and then we've seen a drop-off when we've really seen sort of slightly more challenging economic conditions, and the actual amount of the sheer scale of new supply is starting to have an impact. There's less new supply coming in as prices have dropped in Western Australia over the last sort of 5 years. So the market conditions are really important drivers of new supply, but also so is the cost and the availability of finance. So typically people blame the planning system for a lack of new supply, but really it's quite unfair. Market conditions and the ability to actually fund developments is far more important than individual planning controls, as long as you get the broad zoning right. But even if there's demand, if development costs are too high and developers can't get development finance, you're not going to get housing supply. So certainly things like land taxes, stamp duty, infrastructure costs, developer contributions to infrastructure, they all add to the cost of development. And if they're too high, it can mean that there isn't any development there. So you've got to get those settings right and be, relatively flexible if you're trying to attract new supply. So the appetite for banks to lend for development is also another major determinant. Banks can turn off the funding tap pretty quickly. They can shut down new supply if they're worried about their exposure to risk, and that's certainly happened in particular locations. So banks are some of the key drivers of the conditions required for new housing supply. So we can't underestimate the importance of lenders, not just banks, but also the political stance as well. Some LGAs might be unwilling to accept new development because they want to maintain the existing characteristics of their area. Or large-scale development opportunities are not available unless there's some form of intervention, some form of state government imposing development on those areas through the planning system. Might be restrict upzoning as well, changing or preventing change in the characteristics. But in contrast, there are other local governments that are actively seeking new development to increase that rate base, increase the level of amenities. So that political stance, that whether the LGA is embracing development, some LGAs are easier to work with than others, and some developers will actively avoid some LGAs. So that the characteristics of the LGA are very important as well. We also got the population. I think we've skipped one ahead. Let's go 2 ahead, I think. Yeah, it's just. Yeah, we just stay there for the moment. Also, population needs and preferences. So there's some housing aspiration work released tomorrow, and certainly looking at the changing housing aspirations. But we've seen that sort of drive towards larger developments is not necessarily meeting the actual aspirations of individual households, more driven by what the market wants to provide. But certainly, I think we are seeing a bit of a mismatch at the moment between the composition of stock and supply. So it'll be interesting to see this what happens over the next 5 years or not. But ultimately, it's the availability of profitable development sites that dictate what dwellings are going to be built in the absence of intervention. So if we can move on to lessons from LGAs. Right, so development control is important, and data from the land use planning survey over that study period in those 8 LGAs show that there were a number of those LGAs that adopted and maintained policies that are traditionally viewed as growth constraining, but also adopted policies that enable diversity. So it suggests that the extent to which zoning and development controls allow for development that meets demand, and obviously that relies on being financially viable, is more important in understanding supply outcomes and the actual presence of specific planning controls. If there's money to be made, generally developers are going to work through those planning controls and work through planners. Clearly, if you got the rezoning wrong or the zoning wrong in the first place, you're not going to be looking at those sites. In Sydney, certainly one planner in Sydney explained that redevelopment opportunities in the LGA's town centre were taken up only when more flexible development controls were replaced by clearer development controls for key sites. So flexibility can work, controls can work, depends on the nature of the particular area. Certainly in our 8 case study sites, that the rezoning of land to allow for residential development or higher density was really important in enable housing supply. It was only under the right market conditions that those opportunities created by zoning actually got built out. Weak housing market conditions, you can get the zoning perfectly correct, but if you can't make money out of the site, it's still not going to happen. Infrastructure as well, very important to have infrastructure in place to support that population growth, and those case study LGAs were very positive about infrastructure investment by state and local government, particularly during the early period. And clearly the availability of large sites, the availability to deliver at scale was a major impact as well. A lot of those case study LGAs had large sites, master plan development, which helped tremendously. But also the role of government. There were a lot of policy reforms within those LGAs that played a small but not insignificant role in housing supply. So when policy settings are right, it can stimulate new supply, particularly around supporting permissibility of particular types of development or simplifying and speeding up approval processes do actually have an impact along with the infrastructure investment. And then finally, because I'm probably over time by now, go to the last slide. So what can we learn from all this? Well, certainly investing in major infrastructure, releasing sites, unlocking sites potential is incredibly important. Coordinating land supply processes as well, certainly a role for states and state development agencies to help coordinate land supply, and some of them do a better job than others. Streamlining development approval processes, development industry talks about that all the time, but it can be the difference between some development and no development at all. In terms of urban regulation, policymakers really need to take into account market conditions when looking at zoning or rezoning, because if you get it wrong, there will be no development or you'll underutilize sites. So certainly assessing the financial feasibility of sites in consultation with industry during zoning and rezoning is incredibly important, and that will be around looking at the composition and nature of new housing supply on those particular areas as well. In terms of development costs and infrastructure contributions, you've got to be a little bit flexible there. You don't want to be in a situation where you're ruling out development because you're asking just too much from a particular site. Dwelling diversity, I'm sure in the discussion we'll talk about the missing middle, but there's been an increase in attention around increasing diversity, different types of housing types and sizes. And policymakers have got a continuing role to play there. And just having an alternative approach to development, different finance and construction technologies might open up different sites. Obviously, market forces are incredibly important, but I think a more responsive housing system, which it is less driven by market cycles and more driven by population needs is required, and having alternative tenures and so forth, alternative products to diversify, such as build to rent, deliberative development, more shared equities, again, open up and provide more housing opportunities for people. Okay, that's it. I'm done. I'm sorry I went 5 minutes more than I anticipated, but
no, that's all right. That was a really comprehensive and quite insightful presentation. Lots of material to work through there. And I'll invite everyone to submit questions through the question function on your control panel there. A couple of people have started to do that already. But as you compose your questions, I'd like to turn to Connie Kirk for I guess a reflection on the research and the impact of that for the sector that you might see.
Thank you very much, Michael, and thank you, Stephen. And Stephen, I'd have to say that your analysis is not surprising in terms of what you have come across. Certainly from the experiences we've had within the development industry, all of the pressure points that you've suggested has certainly had an impact on supply. But I think there's also some interesting possible further outcomes you might see from this result. One is that we have certainly looked at commencements, but we also look at completions. So what you might find with some of that research is if you actually look at completions, there will be a lot of stock that was started, and then because of the pressure, the financial pressure placed on the developers, you'll find a lot of those weren't completed. And that's certainly been the research that we have found as well, that the changing parameters around contributions and around changing regulation has meant that there are certain developments that were originally approved did commence, and then because of staged access to finance and then staged changes to perhaps the Environmental Planning Act and other reforms and other changes on development, it meant that some of those developments in the end were not viable. So one of the areas that I think it would really help with the research, and I think this is where your research is going, is it would be absolutely brilliant to have something like the Housing Supply Council resurrected again, where we actually have some more surety around the bigger picture and the long-term trajectory in terms of housing demand and housing supply. And I think one of the other things that your research has certainly highlighted is that there's certainly one size does not fit all. Each state has very different pressure points in terms of jobs creation, in terms of population demand and population growth, with Sydney and Melbourne leading the charge for the last decade in terms of population, with between them having over, and Queensland, if you have a look between those three, there's 350,000 per year moving into each of those cities, around 50,000 each year to Brisbane. You're looking at close to 200,000 to Melbourne and a good 100,000 increasing the population in Sydney. A lot of that population increase has been via migration, and a lot of that migration has been, as your research I think has highlighted, a lot of it has been new professionals moving into that family planning component of the greenfield sites and the external suburbs of and the fringe suburbs of the greater metropolitan areas of Sydney and Melbourne, and then a huge international student component, which is certainly reflected in the spike in unit development in those cities. What is missing, as we've discussed, is that missing middle. But also the shortfall in the, what I would say is the permanent citizen demand for the changing nature of housing as they step through their 3 to 4 cycles in their lifetime. So going from the household to being a student to then being a young professional to then looking at family planning and retiring. And stepping through each of those stages, there hasn't been a cohesive approach to that in terms of planning, and we can see that played out in both, very strongly in both Sydney and Melbourne. And I think the other thing that this research highlights and would be good to look at the correlations is the time frame between approvals and commencements. So one of the challenges we find that the development industry has is there can be a 5 to 10 year delay between the actual purchasing of the land and the actual submission of a design, and then the actual before the shovel actually goes into the ground. So once you're looking at financing, etc. So there's a big time lag between approvals and commencements, and then of course completions. So when we look at statistics, it's really good to look at them as well staged, so that you can actually see the lag and the pattern. And I think this reflects some of that patterning as well. You can see that there was the relaxation of the financing in 2010, 2011, which has really fueled a lot of that spike that you're seeing 2013, 2015. And a large portion of that was due to overseas investment. We've had in terms of the buy to sell market, it is largely driven by overseas investment in Australia, so rather than domestic investment, which has been constrained by the outcomes of the Royal Commission and domestic liquidity, which hasn't been there, and of course affordability. Jobs creation as well has really changed the demand for that housing and what is needed. So I think your results certainly reflect what the industry has been saying, and certainly what we have been experiencing as well, and some of the challenges that the development industry actually has around trying to project and meet current and future demand.
Thanks, Connie. Terrific. Quite a few questions coming through, and I might just jump in to a couple of related questions looking at I guess zoning and its impact. One of them really wanting to explore to what extent the land market responds to zoning policy changes at an LGA level, making profits more or less profitable. You know, does the land value absorb costs or developments of profits over time? Stephen, do you have comment on that?
Yeah, generally, if you zone too high, the cost of construction could basically outweigh any revenue you get on that site, which makes development unprofitable. Now, it's pretty expensive to develop at high density, so you need to have a revenue that can compensate for that cost. So it's really only your higher value areas that can support, you know, higher density type development. So you've got to get that zoning correct. But it's also the other way as well. You know, if you're in a particular area where people demand a particular product, so wanting larger lots, if you zone too highly, you know, in West Australia, it would be, you know, the R codes. Again, people might not demand that particular product. So you really need to look at what the market wants in a particular area, rather than saying, right, we're going to rezone to this and somebody is going to develop, because that's not actually what happens. You need to be able to generate a profit from a site in order for development to go forward. And remember, you know, we rely on the private sector to deliver 90–95% of the housing. So it's no good saying to them, right, you're not allowed to make a profit here, because we're not going to get any housing from it. So we've got to be extremely flexible, and zoning, again, working with industry to find out, well, what can we do on this site? What is actually going to work? What is going to result in development, rather than just saying, right, we're going to get as much as we possibly can from this site, because that's not always an effective approach. I've certainly seen that in Sydney, with a lot of sites not being built out because the zoning was just plain wrong for market conditions.
I'd add to that as well, Stephen. With some of the zoning, there's been rezoning as well because of the time lag we're talking about in terms of some of those original developments, which means that in the end they are cost prohibitive. Also, because of the extra costs that are imposed with new rezonings. So 40 to 50% of the cost of a build at the moment is through taxes. So we've all been pushing for tax reform. And so you've got a situation where a developer's really looking at, with the different zonings, the cost impositions being placed on them increasingly, with increases in developer contributions, and the lag with the development of those and associated amenity. So whether the developer provides that amenity or whether the government provides that amenity, and there's been a huge infrastructure lag in terms of amenity, which provides further on costs for the developer. But then secondly, the increases in those costs and the taxes from that land and from the valuations on those lands, which are also increasing the costs of those developments, which, as you say, means that even with some of that zoning, there are places where originally the zoning was correct. They've moved forward with part of the development and then it's been rezoned. And because of the rezoning, it's meant that the project's just not even viable to move ahead with.
I think, Mike, there's a number of us been talking for quite some time, Peter Phibbs being one of them, about needing to educate planners and policymakers about how the development industry works, about the factors that drive profitability, so they can actually have an informed discussion rather than saying, oh, you're going to do this. Well, let's think about what's actually going to work, and maybe it'd be great if state government could be a little bit more flexible when it comes to contributions, and local governments as well when it comes to contributions, just to try and get the type of product that people want, rather than trying to squeeze every last cent out of the developer. Better to get a decent product than no product at all.
Mm. Well, in fact, the next question, sorry, Connie, you go ahead.
I was just going to say, over the last 15 years as well, there's been a focus on a lag in infrastructure in terms of developing that infrastructure. So the industry, the developers are providing the contributions and developing a lot of that infrastructure, but the associated infrastructure is a lag. So prior to that, a lot of that infrastructure was already built in advance. So it was much easier for a developer to go in because they can actually assess how much it's going to cost. Whereas now, with the lag of that, it means that there's also a lag then often on amenities. So it means that the sites themselves, even when they are completed, are less attractive because the buyers are there going, well, you've got certainly on the urban fringe, you've got some great houses, but the amenity just isn't there. The public transport routes aren't there to get to jobs. The economic growth is not there in terms of jobs. The associated childcare facilities, etc. Schooling is not there if it's a family community for them to be able to move, which then means that the product itself becomes unviable as well and takes longer to sell and becomes more expensive.
So the next question, and perhaps we've covered this already, but I'll just, it's quite nicely pointed, so I might put it to you anyway. You know, land zoning rules change from time to time in a given place. You know, how can developers forecast that? How can we anticipate those changes? Is there a mechanism? And Stephen, maybe that the comment you made about needing to educate and work together more is part of it. But is there something that developers can do to anticipate those changes?
Well, I think the rezoning process is so complicated. It takes so long. It's just difficult to anticipate anything. You might, and it does lead to speculation as well. If you think that there might be a zoning change on a piece of land, you know, people will speculate on buying that land. It's not necessarily helpful. But I've talked about it before. I mean, much more collaboration between the industry and state government to think, well, what can we do on a particular site that's going to deliver a quality outcome? And I was talking to the planning students yesterday and basically saying to them, look, actually developers and planners want exactly the same thing. They want to create livable spaces. They want to create nice spaces where people want to live because it creates value and it creates good social outcomes. So I think a lot more collaboration between, you know, forward-looking strategic planning and zoning plus the industry would be a very sensible thing. And, you know, there is a certain amount of collaboration there, but probably, well, certainly not enough in some states.
I would add to that, and I think we're heading in that direction with, I think, the setting up of the Centre for Population, which was set up last year, so that we can actually look at consistency around data sets when it comes to population projections, so we don't have, you know, the projections that we had a couple of years ago where Perth was allegedly having, I think, 10 of the most congested roads, and you compare that to somewhere like Sydney, we could see it was an absurdity. So I think that consistency of data sets, which is actually a project that is in place by the federal government, will be the first step And again, I think reiterating what I said before, I think setting up something like the Housing Supply Council and having them collaborate across agencies at that national level as well, which means that gives the states surety in terms of the bigger long-term picture where we're heading in terms of population settings and potential population growth, and then those big infrastructure projects that an essential amenity that is needed. So then at the state level, those other decisions can be made around other essential infrastructure, around schooling and associated amenity, roads, rail, etc. And then it means that that zoning can then actually be more consistent and perhaps less a knee-jerk, and it means that developers then have the surety, they know what is happening. And I think the other step that is actually moving forward is with the departments now having a huge commitment to wanting to reduce red tape. So a development that some developments are taking 10 to 15 years, if we can cut that down to 5 years even, that is actually going to really accelerate development. But what it will also do is show that there is not such a lag and not such a gap, and we are perhaps then starting to meet the demand more adequately and less having a situation where there's a big development that's developed for a prior demand. You know, life has moved on, and yet that you've got this development that doesn't yet meet the new demand within that city or within that region or that zone.
Terrific. There's a couple of questions here that I'll just, I guess, draw the theme from rather than read verbatim sort of repeated questions that hit the same sort of issue. But digging into the research, Stephen, if you look at the commencement dates and approvals and commencements and time lags between them, you know, did you have any data on the lag between an approval and a commencement or a completion?
It depends entirely on the nature of the particular product. So for a standard project home build in Western Australia, the lag's about 13 weeks. It's very quick between an approval and a commencement. Obviously, that's going to blow out significantly now with the constraints around civil contractors and builders, whereas it's a lot longer in the East Coast. And it depends on apartments as well. So it really depends on the nature of the actual product itself. ABS have got some interesting data actually on abandonment rates. So they're going from commencement to completions around about, I think, 3 to 4%, something like that, which can be actually quite significant if it's a particularly big approval. But yeah, the lag depends on a number of different things. But yeah, building approval doesn't quickly move into a commencement unless it's a very simple type of product. And as Connie mentioned, it could be a number of years. And of course, the building approval will expire after a particular time, so you have to keep renewing if you're waiting for certain other approvals to come into place. So yeah, very product specific.
And I'd add to that as well, Stephen, it depends on whether, as you're saying, in terms of that product, if it's multi-unit, you've got quite a lag, and you've also got a situation where a lot of that will be purchased off the plan before they'll move to that next stage. Same with the master plan communities. So those master plan communities can have up to a 20-year lifespan. So you will often find that the approval's been given, but the commencements will start much later. And then, of course, with that abandonment rate, a lot of that will be determined by liquidity in the market, a lot of overseas investment interest in those developments. And I think the composition of the owner, is it going to be an owner-occupier or is it an investor? And so we are then at the beholden to global trends in the money markets.
It's actually, I mean, it's interesting you mentioned those off the plan sales and pre-sales. I mean, the bank's requirements now around pre-sales, so the developer having to have a proportion of pre-sales before, that certainly delays everything. The onus on the developer to try and secure those pre-sales before funding, very expensive, very difficult in certain markets, and that tends to delay and a lot of projects won't go ahead. These are very different conditions to what we had in certainly pre-GFC. So those finance conditions, the availability of finance are again, really important. So, development when it comes to that multi-res product is a very difficult game at the moment, unless you've got a really sort of booming market. And so, for example, in Perth, really difficult to try and sell 70% of a 100-unit apartment development because you don't have the level of investors here. They're really challenging unless you're in a real quality location. So it's a major impediment really to increasing supply.
And I also think even one step before that, so when you've actually come up with particularly with the changing settings with Foreign Investment Review Board settings, so it's actually financing the development themselves, let alone, so you're in a situation where you may have moved forward and had approval for a particular development, and those financiers may pull out because of the restrictions and other global trends happening, because most of those are actually financed by offshore investors. So we've got a situation here in Australia where a lot of the big developments around units and master plan communities are not funded domestically, they are funded internationally. So that does have, we are exposed to the global headwinds and what's happening in those markets. And then you've got that second stage that even if they are moving to commencements and then you're looking at completions, you've then got a second set of investors and buyers that you're looking at, and that's not only the domestic permanent residents who have the affordability challenges. You've then got the situation of attracting foreign investors to actually purchase those, because a large portion of the last 15 years properties have actually been purchased by offshore investors, and whether that's for build to rent or build to sell. The percentage of owner occupiers versus investors is quite significant.
Again, it varies significantly across states as well. I mean, there's not so much overseas money in Perth, and the proportion of investors are reasonably low, particularly overseas investors. But you're right. I mean, Sydney and Melbourne markets are actually dominated by that international money. But certainly there's a lot more domestic funding in somewhere like Perth. So again, it's not a one-size-fits-all approach to, quite frankly, anything in Australia.
I think the sense that there is an Australian housing market has been well and truly exposed as false in the last in 2020, and I guess that's one of the themes coming through in some of the questions asking about the lending climate, particularly around multi-unit housing, and how that's changing in 2020 and likely to sort of change in the coming period. What are your thoughts on that?
Do you want to go first, Stephen?
No. I don't think anybody knows quite what's going to come out of this. Again, we were talking about it earlier. It's creating, again, very different outcomes in different cities. So the established market in Perth is starting to look pretty strong because of the number of people that returned and the fact that it's been weak for quite some time. There's a lot of latent demand, and of course we've seen a big boom there. But there is a little bit of reticence in terms of your lenders in the current climate, which you can understand. Obviously, quite a bit. Quite busy as well with all the mortgage deferrals, and banks very much about risk, and so they'll be weighing up the market and making decisions, I think, a little even more carefully than they normally do, and difficult to call what will happen to overseas funding as well. So my sense generally is that, again, the recovery will be very different in different cities depending on their starting point. As I say, Perth is coming from a very low base, and I think will pick up quite quickly, where I think the outcomes in Sydney or Victoria, Melbourne are going to be rather different because they're more reliant on different demographics. So Connie mentioned the student market earlier. It's not that important in Perth. Much more so in Sydney and Victoria. So I keep saying Victoria instead of Melbourne. I don't know why. But anyway, I think it's very difficult to call, quite frankly, what's going to happen even the rest of this year, let alone next year and beyond. And banks will do what banks do, which will be always in their interests.
And I can add to that. What you can see is you can actually see some changes in demand just based on searches for real estate, and also some of the inquiries that are coming through. Whether they convert to actual sales is another thing. But certainly, if I speak to Sydney for the moment, and across Sydney, there's variations again. But if I look at the Northwest, what they've actually found in the last 2 months is there's been a huge change in the investor interest portfolio. So it has moved from it's now a Singaporean, Hong Kong, American, and Chinese in that order, whereas before it was the Chinese investor in Australia as the priority investor. So we're seeing a change in composition of that. I expect that trend will continue as Australia, being one of the first Western economies to recover, I would see an even greater interest coming from the US and the EU as it recovers. We've got a very strong European ties here, and I think you will start to see a renewed interest from the traditional Italian, French, and Greek communities moving here as their economies are starting to grapple with their recovery as well. Australia is being seen as a coveted place. Even during COVID lockdown, there were increasing inquiries from Hong Kong and Singapore and some of the other emerging markets such as Malaysia and others. So I think there are opportunities there once we come out of COVID to actually look at our offshore investment portfolio and diversify our marketing to that market. I think domestically what you're finding is it reinforces what Infrastructure Australia had been finding, in that there was a desperate need for blue and green spaces in many of our suburbs, and there'd been a lag with that. So you're finding a lot of people are wanting to already sell up and move to the urban fringes of Sydney and New South Wales, and Queensland's also finding that there is a spike in some of Brisbane City and some of their surrounding areas, which are from some of the domestic states of Sydney and Melbourne wanting to move there. So empty nesters moving earlier than initially anticipated, and then younger families wanting to actually relocate. And some of those regional areas, Geelong's experienced a spike in interest in investment and purchasing, so has Wollongong, Newcastle, etc. So I think a focus on diversification of those regional centres, what it will do is reinvigorate those centres, and I think it means that we'll also improve the affordability paradigm as people move to some of those areas. And with the new hybrid style of working that we're all becoming accustomed to, it means that those options of moving are far more viable than what they have been in the history really of Australia, because we've been able to now allow people to still keep city-based jobs with incomes and be able to move into those areas and still be able to function and be productive in their roles and not have to daily commute to a place of work.
And these potentially changing patterns of demand require a very responsive housing industry. Because if you're suddenly putting pressure on certain markets and there's no response in terms of supply, there's only one thing going to happen. So it's just really important to be prepared for a lot of these changing patterns. And regional areas are always a good barometer of what can happen when you have a demand spike and no housing supply response. So we've really got to be flexible, speeding up approval times and land release and so forth, and ensuring that we don't have the sort of affordability problems that we've seen in our cities due to these pressures.
We almost need a three-tiered recovery, because we're already going through a three-tiered recovery process, with Melbourne in the worst scenario, and our heart goes out to everyone in Melbourne, and then Sydney and as New South Wales and Queensland and ACT in a very similar position, and then WA and Tasmania and and the Northern Territory and Adelaide in a very similar position as well. So we've almost got a three-tiered recovery, and we almost need a three-tiered approach to that recovery, and almost looking at cluster style recovery in terms of housing supply, because we will be looking at those walkable, shoppable neighbourhoods now that people want, and people are wanting that changing dynamic. We've alluded to the fact people in even housing were wanting things like studies, etc. now, because that's essential. So I think a cluster style approach in terms of a development plan moving forward by state as well would be very relevant.
I think that's right, and it's certainly something that AHURI perceives. Steven mentioned some work he's doing for us at the moment, or about to publish through us at the moment, looking at the construction sector's capacity to support, new build and economic recovery, from a sector perspective. We've also got another piece of work through our COVID activity looking at regional recovery, which is a really important ingredient that we shouldn't overlook. Part of the range of research we'll be publishing over the coming weeks. And actually, you've taken us into a topic that leads nicely into the next sort of set of questions, which are asking for particular advice for getting support to organisations looking to drive housing development in regional areas, with particular cohorts in mind. For example, for Aboriginal community housing providers, where there's good land availability. Or good cooperation through land councils, but often the focus of the development sector is more on the cities, and so there's not as much bandwidth in those regional locations. So how do you draw that capacity to the regional areas?
Do you want to go first, Steven?
Again, no.
I must be asking good questions if you're both doing
that. It's a really difficult one. There's a very variable level of support through state government. So, I mean, the Western Australia state government's been pretty good, I think, working with the Department of Communities, with different groups, with some success in the Indigenous space and some failures as well. But I think the first port of call really would be state government. And I think there's also a growing interest from sort of organisations like Development WA in working with Indigenous groups to try and deliver some really positive outcomes. So I certainly think the appetite and the interest in delivering quality regional outcomes is improved or increased significantly over the last few years, with state governments recognising the significant challenges in regional areas. Certainly regional WA, there's some areas that are really struggling with land availability at the moment, given the various regional land booster packages that meant land has been bought up. But certainly I would start with state government and even community housing providers as well. I think are cognizant of the challenges there in regional areas. But it is difficult to get your traditional sort of developers working out there, and so it's really important that your sort of regional specialist builders can get involved in this sort of important activity. But personally, and other than trying to approach state governments and asking them for help, I wouldn't have any specific advice.
And I'd just like to add to that. I think there's a couple of things. The Northern Territory have got some very interesting models, both driven by Indigenous enterprise, which looks at the new typologies. I think some of them were showcased at AHURI's Congress last year. So the new style of housing that is very functional for multi-generational homes in the Northern Territory, and there's a lot of models there which could be replicated in the other states. I think a key outcome over the last 3 weeks has been the recognition of portability of trade skills. I think that's been absolutely crucial to help move talent across state borders, given COVID restrictions and quarantine parameters. But we've got something like, 200 different grades of licenses for trades And so there hasn't been that portability. So the cost of being able to go from one state to the other has been quite costly for tradespeople, and have had to go and renew their licenses in other states. That has just been recognised by the federal government. So for the first time in Australia's history, we've actually got portability of trades, which is brilliant. So tradespeople will be able to, if they find that there isn't work in the city or there isn't work in a regional area, they can easily then move across borders to other areas and help. So that would certainly help with Indigenous development in housing in the Northern Territory as well. The Northern Territory government has actually just come out with a plan to try and accelerate some development there, which I think is brilliant. And that's driven by some Indigenous enterprises as well, which I think would be fantastic. And again, the CHPs have, I think, shown a very proactive strategy in being able to, at the moment, purchase excess supply from developers who, of course, feel that they have now been hamstrung with lockdown and with the removal of the international market. So that's actually giving them access to some stock, which could be affordable stock for individuals who need that at that affordability end of the equation, which I think is absolutely positive. But again, I'd probably suggest going back to that cluster style development for each state and region, so that you can actually look at what is required within that region to ensure that each region that is developed will actually have supported amenity as well, because it's not just about building a house in a town or in a rural area. You need to actually make sure that there is supported amenity. Yes, the hybrid style of working will mean that you don't actually have to necessarily commute to a city location for a job, but you still need amenity in terms of being able to access schooling and childcare and medical support, etc. as well. So it can't just be a matter of let's build houses in smaller townships. It's about making sure that we have a very strategic approach to all levels of amenity and infrastructure, and investment in that infrastructure is absolutely crucial at the moment.
Thanks, Connie. One of the threads running through the questions, and I'll just take a moment to congratulate this audience on the quality of questions coming through. They're terrific. And Stephen, there are a number of comments congratulating you on the research and the important data you've brought to light. But several of the questions are talking about diversity of stock. How do we encourage better diversity of stock? So, you know, Australians are shifting towards larger houses, it seems, from some of the data there. How do local governments encourage more diversity of dwelling size? How do we support developers building social housing that's more diverse? You know, what are the ways we can support greater diversity?
Diversity is really incredibly important. In fact, there is some more AHURI work coming out looking at just that, led by Catherine Gilbert, looking at delivering diverse, affordable housing, and planning is certainly part of that. Just working again with developers to create the conditions where you can deliver more diversity rather than having this sort of cookie cutter type approach. I think we are at a stage now where there is evidence available to show that consumers are very keen on a house product, but that house product does not have to be a separate house product on a large lot. You can have a townhouse, you can have micro lots. These products are popular and support apartment living, apartment density type products. So I think that's half the battle. The community opposition is always an issue there, but again, I think there's a growing sense of understanding and why we need diversity. So I think we've moved a long way, quite frankly, in 5 years. I do feel, particularly from a Perth perspective, that there's a lot more positivity when it comes to delivering diversity. We've got new medium density design codes coming out, which again will help in delivering a better quality product within our traditional infill areas, because the stuff that has been delivered in the past has been pretty ordinary. So I think that design guidance will help. But I think there's always, the market always drives these things. And once developers understand, and I think they already do, that there is a market, there is money to be made from delivering different types of product, then it's going to happen. Planning settings are always important, and then there could be some tweaking around the edges, around taxes and contributions to try and incentivize more diversity. And certainly, you know, community housing providers partnering with various organisations again can deliver some diversity. So I think a number of different strategies, but state and local governments working with developers to deliver diversity is probably the most important thing. And because, you know, if you get a decent product out there in an area with high amenities, it will be bought. Simple.
Yeah, I'd agree with that. Much more stakeholder engagement, using technology as well, the digital technology, to actually help with that stakeholder engagement as well, to show what that looks like, so that if there's some opposition, you can actually demonstrate what the end product is going to look like. So you can do that with 3D modelling now. So I think that can help with some of that stakeholder engagement, and again, the incentivisation. We know COVID has changed the world forever, and it's certainly changed the need, as we can see moving forward. We have to move forward on the basis that whilst we might have an elimination strategy here in Australia and an eradication strategy or a suppression strategy, the rest of the globe is still playing catch up. So those borders will be closed for some time and only narrowly open. So we really have to look at a 3 to 5 year domestic focus, as each other country is doing. And in fact, our number one investor being China is also focusing now internally, domestically on their market. So we need to really look at domestic reinvigoration. And so what that does mean is that we really do need to look at not necessarily what through migration, what housing type we need, but looking at domestically, what does our new population need, our local population need, and what their new needs are post-COVID. And we've touched on that, the need for perhaps that third bedroom, or a change in design for storage. We know, if you know, for poor Melbourne having to go into lockdown so many times now, there's the need for storage, not that just-in-time inventories as we've had previously. We need study space. We've also got to look at, which is where I come back to, working at the state, federal and local government level, and collaboration with developers, so almost task forces that can look at those LDA areas and state levels. But one of the areas we haven't yet touched on is the domestic population. So we've been pushing, and in fact the Treasurer has pushed for perhaps 2 children, so not Peter Costello's one for each parent and one for the nation of 2002. But the Treasurer did mention, of course, we need to also increase domestic population. In 5 to 10 years' time, we are going to see the results of that baby boom from 2002. So we've got, for the first time since the 70s, and in fact, which was our second spike in the 50s, which was our first spike, the boomer spike, then we had another spike in the 70s, we will see a huge number of 2000s to 2007 children born, which is the new baby boom, the digital baby boom, will be needing housing. And they will also be needing to be educated. So we've got a situation for the last 5 to 10 years, we've really relied on overseas migration to fill that void for education, domestics, to plump up that domestic student numbers. We've now got larger domestic student numbers coming through the pipeline. They'll also need housing, and they'll also need to get onto that housing ladder. So we need to look at, are these going to be children who are going to stay at home? In which case, do we need to have bigger homes still to accommodate them because of the affordability paradigm, or will they be needing the student style accommodation in those city areas? I suspect they won't. They're they're the kind of offspring that would like to perhaps stay in those cities and then in their parents' homes and then travel. So all of that is going to affect what kind of housing stock and what we need in the incentivisation around that. So I think we need to be looking at that as well. So what's happening domestically, not just what's happening with our offshore interest in Australia.
Thanks, Connie. We've hit the end of our time now, so I'll have to wrap up. There's clearly lots more we could talk about. Lots of really interesting comments still coming through, comments and questions, including some interesting debate around the baby boom comments you've just concluded with there, Connie. Tons of really good questions we didn't get to, and I'm sorry we didn't get time to get to all of them. Talking, some really interesting questions, digging into the really detailed data from the report, and I'd encourage people asking those questions to have a look at the report. It is on the AHURI website, connectable from the front page or through the link we shared earlier. And the session is being recorded, so you'll be able to have a look at this webinar again later if you'd like to. Lots of questions around social housing, homelessness, COVID responses, baby booms, working from home, and a whole lot more we didn't get to. But we are actually just a shade over time now, so I'd better wrap us up. I want to start by thanking Steven for your presentation and Connie for your very generous participation, and to everyone who's joined us today. AHURI's going to take a short intermission from our webinar series. We'll be back with some exciting new plans quite soon, and an invitation for the next webinar will be emailed to you in due course. We've also got a huge program of research reports coming out over the next few months. Steven alluded to a couple of them, but there's an absolute wealth of material coming throughout the rest of 2020, a really broad range of topics being covered. And I'm really pleased to announce the National Homelessness Conference to be held online on December 1 and 2. And of course, this is a conference that was due to be held in Canberra in August of this year during Homelessness Week, but had to be cancelled due to the pandemic. We've reconfigured as an online conference, and it will adopt the theme, the year that changed homelessness. And I think that doesn't require a lot of explanation. We'll be examining how the pandemic has impacted people experiencing or at risk of homelessness, and the policy and practice responses in this really unprecedented year. The registration's open today, so head to the AHURI website for more information. And a quick reminder that we'd really appreciate your feedback by completing the short survey that's being sent to you today. And if you want to share this webinar with your colleagues, it will be on our website in the next few days. So until we see you again, hopefully in person, thank you.
Thanks. You very much, Michael. Thank you, Steven. It's been a delight, and thank you for the audience. Okay.
Yeah, thanks everyone for attending.
They've been great questions. Thank you.